Hey guys, what is happening, man? What's going on? What is going on? So I thought I'd do a little video today on how to flip your bias and how you can avoid taking losses, and if you do take a loss, how you can basically get back in the trade on the other side or on the correct side of the market if you are wrong, right? So I know that a lot of you have issues with this, and a lot of you finding it difficult on knowing when to flip your bias. And I'm gonna really show you how I've done it or how I would do it on Euro USD's price action today, okay? And more just how to go over it in that way. No. So I'm gonna just discuss today's price action, right? So today, guys, I was focusing on in fact, let's just go into the high. Let's just start on high time frame breaking out, right? So we go into the high time frames, guys. What we have here is that let me just switch the chart actually to make it easier. What we have here, right, is that we have price is moving in between two key levels. All right, so it's almost stuck in this tight ass range, and it's not really moving out of it. It doesn't really want to go anywhere, right? So as we can see, we had a deviation above that high right there, and then price came back down, and it's been oscillating between these lows, right? So you guys can see price came through here, deviated below that, then pushed back into the range, deviated again, just closed below it, pulled back in it, retested. So there's extreme, prices just literally oscillating in between two key levels, right? Now, what happened earlier last week was that price retraced back up to that same key level, right? The same level it's been having, it's deviated out, and it retested it again, and now it's pulling back inside of the range, right? So this just gives me an indication if you guys know anything about ranges. As you guys know, price is inside of a range 70% of the time. And a lot of this time, we're gonna have to figure out how to trade price inside of a range. So just look at this as a channel, right? So if we have price coming up to test the extreme of the range, extreme of the channel, and it fails to close above or it fails to break out and create new highs, and it closes back inside of the range, where is it going to be aiming for? It's going to be aiming for inside of this area, right? So liquidity, either previous day's lows, previous week's lows, intermediate lows inside of this area, all right, and avoid as well. So we go down to the 4-hour chart. I'm just literally walking you guys through what my process was today and why I had a bias. So as you guys can see, price neutralized liquidity above that high right here, right? And then it pulled back down, it retested a bearish block over here, and then we saw an expansion down, right? So as you guys can see, price was bearish, and we also had a short-term low underneath here, and that got blown out as well, right? So today the question was for me was to see, okay, is this level going to hold or not? So in other words, is this 4-hour level going to hold, and are we going to see a push up, or are we going to see price break below that level and form lower prices? Now, obviously, we've seen it now, but I want to just walk you guys through what I was doing today and what my mindset was today, right? So obviously, guys, I expected price. I would come to the conclusion that price was bearish, that price was probably going to reach down, and I was aiming for this next daily block, right? That's what I was aiming for. That being said, what happened today is that when I went down to trade, guys, I saw price neutralize the previous day's low. All right, so inside of London Open, we had price drop down, neutralize liquidity beneath that low. Okay, a key daily low, guys, and price more or less pulled into this consolidation area right here. And I didn't find support at this block, which is really what this would. This is a really big telltale sign that price most likely isn't gonna find support there, and that's something I missed out on, guys. Because if you guys have followed me for a while, you would know that I usually want to see price come down to the EQ of the block maximum, and not close beneath it. But obviously, price closed well beneath the EQ, almost closed below the actual wick of the block, right? So we had price, shoot down, neutralize liquidity, put into like some consolidation area. And what I was thinking is that obviously I was thinking shorts. I was thinking, alright, where am I going to get short from? But what I decided to do was once I saw price find support here, right? So it came up, fell to ground to get above that breaker and use as support, broke back down beneath that, beneath this swing low, beneath Monday's swing low right here, right? Broke below that there, found support at the short-term 15-minute block, and then it pushed higher, right? Same thing happened again. It came down, price found support again and pushed higher. Now, what I was thinking could happen today was I was thinking, why aren't we just seeing a breakdown, right? Why aren't we just seeing price? Why is price respecting bullish order blocks, even though this is, real short term? So my thought process was, okay, price most likely is going to be pushing up to neutralize liquidity somewhere above this market, all right? So usually I'll use the Asian highs intraday. For me, the Asian highs is a key intraday liquidity point. Price likes to pull back to this point and neutralize liquidity. So I was targeting here, right? Up here. And I was also targeting it because it was a swing high just beneath this Audi block, and this is where I was looking to go short from, right? Now, as much as the 4 hour block, right? As much as we did have a 4 hour block right here, just to negate this for a moment because I wasn't actually focusing on this today, but we do have a area of resistance right here. Now, what I want to show you guys today is how you can still make money or you can still flip your bias even when you're wrong, right? So what happened is I went long from around here, okay, on the second retest of that block, put my stop below there, and again I was targeting this high. Now, what happened? What the result was that price obviously pushed up here, pushed up. We had an expansion up. However, it did not close above this block, right? So price did not close above this hourly block. Now, what I tend to do is I use, whenever I take a trade, I say, okay, what's the best outcome and what's the worst outcome, right? Generally, that's what I do, and that's the process that I go through. So, in other words, what that means is that if I'm long a market, right? If I'm long and I have my target up here, I'm looking to see what resistance points inside of, what resistance points are between my entry and my target that will either slow price down or possibly reverse price, right? So we had a 15-minute order block right here, and we had an hourly order block here as well, and we had a 4 hour order block. So this was a significant area of resistance, right? If we go back to the 4 hour chart, you guys can see it, right? This is the area we're talking about, and that was literally right near a key 4 hour level, right? If we go to the hourly, same thing, key hourly level right there. Okay, so let's just get rid of that and put it on a 15-minute, right? And then boom, that's what we had right here. So we had a key price came to a key hourly level. Okay, so what I tend to do is I say, okay, if my target is up here and I want price to, this is what I'm aiming for, just because there was liquidity here, we had a void here that I want price to fill into, all right? What I do is I have an invalidation level. So my normal invalidation level will be below, let's say I entered here, it would be below the structure low. So if price breaks through there, I'm definitely wrong. However, I'll also have invalidation levels for, when my trade is running too, right? So what that means is that I'll say, okay, this is what I'm aiming for. My target is above the market, but if price does not break above this, resistance level, in other words, if it doesn't push through an area where it should push through in order to get to my desired target, then that's probably when I should, I'm probably wrong at that point. I should probably lock off my trade and flip my bias. Now, the reason why I flipped my bias, guys, is because I knew this market was bearish anyway, right? It's clear price is forming lower lows. It's coming in, order flow is also bearish. Price is respecting bearish areas of resistance rather than support. Even down here, guys, you can see the pullbacks into blocks, break below, market should break, pull back into a block, right? So it's clear this is bearish. It's clear the market is bearish. So the trade I was taking today was actually against the trend, right? It was against order flow. So essentially, what I would do is that when I am taking when I'm taking any trade, it can be even a trade with the trend, right? I'm gonna have areas marked out that will stop price from getting to my desired target. So if price fails to break through these key levels, right? So this is the hourly block right here, and this is the 15-minute block. If price fails to push through that and create a higher high, right? Then that probably means that I'm wrong on my trade and I need to switch my bias. Okay? So like today, when price came to this level, when it was, it's almost close above, it meandered around there a bit, it tried to push up again, and as you can see, this candles, we had selling pressure pushing price back down, then we saw a sell-off down. That was a big indication for me that price is most likely going to be bearish, right? Why? Because the order flow is bearish and it's coming to a 4 hour key level and an hourly block and a 15-minute block, right? So it's coming to key resistance. So in this situation, because I was, I would have realized that, okay, I'm pretty on the wrong side of the market. What do I then do? What I then do is I would close out this long position, right? Because obvious price is not going to, it's not going to push higher and create higher highs and reach a target. So what I then do is I say, okay, if I'm looking to sell, where would I sell from? And where is price reaching for? So what I'll then do is go onto the 4-hour chart and I'll say, okay, where is the next area of liquidity that price is probably reaching for if it doesn't push through this area, right? So price found resistance inside of that block. So where would be the next area of liquidity inside of this area? That's what I'm asking myself now. We have a key 4-hour low right here. Let me just get rid of that. So this would be the area that I start targeting at, right? Because if price, if price is going to find resistance there, it means they're putting price back up into an area of resistance to accumulate more orders. So that means they're going to send price the other way, and where they're going to be targeting, they're going to be targeting the next key low, right? And as you can see, this was the next key low. And of course, we also have another key low right here. That's just below this breaker. All right, so this, once I have my target, okay, it's pretty simple, guys. I just wait for structure to give me a setup, okay? That's what I'm more or less doing now. So the key thing to remember, guys, is that if price is not pushing through a level it should push through, if it's going to reach its target. So let's say you're bullish like I was here, and your target is above this structure right here, above that structure high, and price cannot push through that level, then it's extreme in, it cannot push that level in terms of closing above it. That's the main thing, guys. Closing above it, or we still get bullish structure on the lower time frames. If price isn't, forming new higher highs on the lower time frame, or it's not closing above this this resistance level, then that probably means you're on the wrong side of the market. And what you should do is you should wait for structure to give you a setup on the other side of the market. Right? You should wait for sales. Now, a good place to sell from would in fact be the same place that price is finding resistance at. So what you can actually do is you can use these levels almost as pivot levels, right? So if this was a level where price is finding resistance at, and you're in long down here, and price is not pushing through a level, and you can see it, as you can see, there failed to close above it. It didn't even close inside of it, right? So it's obvious selling pressure there, and price is lining up back with order flow today. You can use this as a level to sell from, right? Liquidate your current positions and then target the next structure low, which could be here, or the next significant structure low, which would have been, almost the 1406 level right here. Okay, so it's understanding what resistance points are what support points are gonna stop, your desired position from reaching its target, and using these as areas to sell from or to flip your bias from, right? It's more or less using your invalidation levels as areas to switch your bias from. So when price fails to get above that area right here, you can just say, okay, I'm going to take a short from here. I'm going to use this area as a pivot level, because if price had enough momentum, it should have pushed through this level and closed above it, right? If it hasn't, that means it's probably going to be seeking liquidity from below the market. Okay, so this is how I use this is more or less how I just use structure levels and support and resistance levels, guys, in the form of blocks, supply and demand, whatever you want to call it, as pivot levels to switch my bias from. Okay, if price can't break through above them, and if I know that the order flow is bearish anyway, and that price can't break through area of resistance, then that's probably where I should be selling from. All right, guys, just think of it as, if price is not, if price isn't pushing higher and it's finding resistance at some point, that probably means that that's a good area to sell from. Okay, and that probably means that area is going to be a good area to take a short from, to target liquidity below the market. Okay, so it's just about understanding what the structure of the market is. Okay, if price isn't forming higher highs, then you should be, you should be able to switch your bias right there and make up for the longs, or make up for your previous position. All right. So I hope you guys found this insightful. And if you've got any questions about it, do let me know. But I just thought I'd send this in for you today, and I will do a review for you guys later as well. But this is just a video explaining how you could switch your bias based on the structure of the market. All right. So anyway, I hope that you enjoyed that. Take care.